Okay, my take on the market. First of all, let's remember the stock market right now is we have more money coming out of the market than going in. And you're going to ask, well, why is the stock market still going up? Because they're making it go up through stock buybacks. That's why you don't follow the noise. You don't follow these jibber jabbers on TV tell you keep buying markets, everything's terrific. No, when the bond market, you see more people, more institutional money going into bonds than into the stock market. That's a clear message that the market's in deep trouble. Okay, so they're trying to prop the market up. Last week they tried to do it using the banks when they made the call that the banks that we were going to cut rates. If you remember, the banks on June, here I'll get you the date, the banks right here when they snapped up, remember on this date right here, we had a big move on June 28th based on the fact that they were suggesting they're going to cut rates. So that means banks can buy money at a lower rate and charge more. So they thought their profits would go up and people started to buy. And I said, no. On June 25th, I said this. On June 25th. Here's my take on the market as of June 25th, 2019. I believe we're going to get a correction of 5 to 10%. And there we are. And I still believe that we're going to get a 5 or 10% correction on the S&P. The banks are falling apart. And I think overall what is going on is this stock buybacks, or they're kicking in heavy. They're trying to offset the terrible GDP growth, the terrible earnings. Remember, we got just two things going wrong here. We got our economic GDP growth is falling apart. Okay, if you take last quarter, 2018, the first two quarters, 2019, our economy has only grown by 1%. 1%. Now, they're going to tell you it's 2.2% the way they cheat, but you can take either one. They're still far below where they should be of 3%. So we got a problem with the economic growth, number one. Number two, earnings are terrible. S&P earnings are going to drop from 4% down to negative 2%. That's going to be really negative. Those are what's dragging on this market, why we have so much money going into the bond market and out of the stock market. Okay, gold will come back. The dollar will continue to drop big time because of, again, people are going to look to safety. They're going to go to the bond market like they're going now, but it's even going to get worse. Okay, I think this earnings season we're in now, in about a week and a half, I think you'll see this whole market start falling. When we get to the banks next week, when the banks report, I think that's probably when we're going to see my 5 to 10% estimate come through on a pullback. But this market is in real deep trouble. Okay, all right. I'll see you on the charts.